Gervais, great to join you today. You're obviously a hugely prominent investor and supporter of UK small mid caps, and it seems now we're starting to see maybe a turning of the tide in terms of it's an asset class that has underperformed, but over the course of last year, that's looks as if it's reversing. How are you seeing the development of the market right now?
Yeah, I think it's very interesting. I think there's global investors, not local investors, but global investors have a huge weighting in assets which are very capital orientated, very big companies, very correlated. And I think with the uncertainty of nationalism, they're looking for a little bit of diversification. And one of the ways you find diversification is equity income stocks. The UK happens to be loaded with them. So 2 or 3 years ago, I started predicting that the UK stock market would start outperforming the US market. It sounded a bit mad at the time, but it was all about capital being allocated, low valuations, etc. And what we saw in 2025 wasn't just the UK outperformed, but it outperformed by a decent degree. It made very good returns, dollar-based returns, about 35% for the FTSE 100. Really good year. And what's been interesting about the current year, 2026, is the UK is outperforming, and actually, if anything, the US market's hardly moving. So actually, the outperformance is even greater.
Right, and it doesn't. I mean, there's a lot, as you said, there's a lot of money locked up in very large, liquid US stocks. It doesn't take much of that capital to be reallocated into smaller, less liquid stocks to really move the market, does it?
No, not really. I mean, I don't think we're going to see institutional allocations increasing very much. I don't think actually even many of the new investors are going to come into the UK small cap market for a while. I think that might happen in 3 or 5 years' time, actually. But what I do think is actually many of the existing professional investors, those which run small cap funds, will start to move capital away from some of the mid caps into the small caps, and as you move from small caps into micro caps. So if you've got a billion fund and it's in, say, 40 holdings, that's 25 million in each. Well, you can't really put in 25 million into a 200 million pound company. So they have to put 5 lots of 5 million in it. And that will then boost that. And then if you want to invest in the 40 million pound company, of course, you have to put 1 million, 5 lots of 1 million in. So you just see marginal allocation, as you say, down just the tiniest amount. And what's been interesting about the market is, last year Aquis did really well, you raised a lot of capital, but what's interesting is the market's still open this year. We've seen a series of new issues, a series of secondary issues. Many of those issues haven't just done well, they've done very well. Now, of course, some of the mining stocks have done very well, for example, but the point is, that's really liquefying. So what's been interesting about the current year isn't just that the FTSE 100 is doing perfectly well, but actually the small cap sector has stopped underperforming. Now, it hasn't started outperforming, right? But it doesn't take much, as you say. So I think we're just at this turning point.
And you said there's been more deal flow. Are you expecting a significant surge in IPO activity? What do you feel the timing will be in terms of reversing the de-equitization that we've seen for the last few years?
Yeah, I think there will be IPOs. I think there's quite a lot of private equity houses which would like to list in. But many of these companies are billion or 2 billion or whatever. I don't think it really affects the smaller end of the market. There have been some IPOs on Aquis, on the main market over the last year or two. So anyway, I think that's still open. But I think the best of the deals will probably be when companies are taking advantage of a particular situation. They raise capital as a secondary placing, and it makes a difference to the future, and you see these share prices surge on. Investors make good money very quickly. They like the opportunity, and then they look around for more around that. So I think it'll be more driven by secondary issues to start with rather than primary issues. I think, in 10 or 20 years' time, when markets have moved on and nationalism has been difficult and many of the zombie companies have failed and the winners have won disproportionately, which I think is going to happen, then I think actually the number of listings will actually massively increase. My working assumption is that the number of stocks listed in London will be double the current level in 10 years' time.
Interesting. Gervais, always a pleasure to talk to you. Many thanks for your insights.
Thank you, Dan.